Hello traders, welcome to the flash course on how to correctly position your stop losses, brought to you by Investoo.com. In this lesson, we're going to teach you how to correctly trail your stops using the structure of the market. And this is very important. You already know how to place your stops, how to calculate your position size. Now you're going to learn how to trail them. A lot of traders trail their stops using a method of pips. This means that if the market moves 20 pips in their favor, they are going to trail their stops 10 pips. Okay, this doesn't work, because what happens is that the market can come back to you and stop you out on a small win just to see your trade, or what the trade could have yielded when the market really goes in your direction. We're going to grab this example on the US dollar, Canadian dollar. And as you already know, we are in the money on this one for about 116 pips now. Okay, the market is really dropping, and we are making a lot of money on this trade. What's going to happen now is that I'm going to teach you all about stop trailing, and we are going to start at the beginning of the trade. This means that we are going to see the trade from the opening level, this one right here. Okay, and I'm going to use the actual stop loss to trail them. Okay, now the first thing I want you to notice is the first drop from the area where we sold to this point right here. Now let me thicken out this chart for you. Okay, this is the area where we sold the market, and this is where we got the first push down, and then we got a corrective move to the upside. That really didn't scare us, because we are still in a down structure even though we just made a new high. The reason is that we are going to take this high, and this is the new low, which is a lower low based on the previous structure. So we are making a lower low, and we are making a lower high, which means that we have broken with the previous up structure and now starting a new down structure. When we make this new high, we need for the market to make a new low in order for us to consider this as a new high. Remember that price can come up all the way up here, just dip a little bit and continue its rally to the upside. So we really need a new low in order to consider this a new lower high. When we make this new low right here, this is a high that we can consider, and we can drop our stops or the risk on this position even lower, to risk only 36 pips. So now if price breaks with this level or this high, then our trade idea is no longer valid and we need to get out ASAP. We have diminished our risk, but we are still risking. We are still on an open risk trade. We are not on a free position. Okay, now this is what is going to happen. The market is going to go again and test our area of our entry area, our entry zone. You can see that there was a lot of struggle. There was a lot of struggle between buyers and sellers here. And of course, because there were sellers like us trying to push down the market, this is, or that pushed the market down and broke with this structure, this is the level where we were going to find new sellers. And you can see here that we have 1, 2, 3, 4, 5, 6 indecision candles before we dropped. So when this happens and when we drop and we make a new low, then we can move our stops to break even. All right, the correct position would be a few pips above it, because we need to put our stops above the highs. But I think it's fine to just put your trade on break even. Okay, now that we have seen how to do this on the higher time frames, we are going to learn how to do it on the 50-minute chart. And the reason we want to learn how to do it on the 50-minute chart is because of this. Right now, this is what the market looks like. We made a new low. I'm sorry, let me just grab this horizontal line again, because I am going to paint the entire move. So we made a new low, a lower low, we made a lower high, we made a new low, and then we tested the entry zone where we found new buyers. And this is what happens when you try to trail your stops on a higher time frames. Okay, you are going to get that there is no retracement where we could actually move our stops to. So we have to wait for a deeper retracement, which would mean that we could start seeing our position erase about 50 pips or 50% of our gains, or we can go to the lower time frames, which we are going to do right about now. So this is the 50-minute chart, and you can manage your trade on the 50-minute chart. Now I'm going to show you what has happened here. First of all, we made this low, then again we retraced. All right, then we moved back down to test the same area, then we moved again to the zone of entry where we found the real sellers. Now let me just thicken this chart for you as I'm going to show you what to do. You can see the price dropped hugely here, okay, and we found buyers, and the price retraced to this high, okay, and then we dropped and we broke with this high, okay. We broke with this low. When we break with this low, this is now considered the new or the nearest high, okay. Because we have broken with this level, we can now move our stops right here. Of course, you can be taking profit all the way down. I mean, you could have taken profit here and here, but this is just a lesson on how to trail your stops. And now what's going to happen is that we are actually going to wait maybe for price. Let me just put this right here. Maybe for price to come and retest this zone and continue its down move. All right. And when price retests this zone and of course breaks with these lows, then we can move our stops to the next lower high. And why are we doing this? Because if price breaks with the with the highs and makes a higher high, then our trade idea is no longer valid and we need to take our winnings out of the table.